Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week on the programme, we're going to hear from the CIO of the Americas and head of global equities for UBS Global Wealth Management, who's joining us to explain why the bank expects structural trends to be the biggest drivers in equity markets over the long term, and how smart investors can best position to take advantage. The UBS CIO recently introduced its Global Equity Framework, which utilises a combination of three principal perspectives to identify investment opportunities: macroeconomic, structural, and company-specific. The structural element enhances the traditional equity research process by focusing on what UBS is calling transformational innovation opportunities, or TRIOs, three trends expected to have an outsized influence on equity markets in the coming years. These are artificial intelligence, power and resources, or electrification, and longevity. It's a real pleasure to welcome back to the programme the aforementioned Head of Global Equities for UBS Global Wealth Management, Ulrike Hoffmann-Burchardi. Ulrike, welcome to the programme. It's lovely to chat to you, and it's super interesting, I think, to talk a little bit about TRIOs, these transformational innovation opportunities. And maybe before we sort of dive into them and get into the nitty-gritty of these compelling thematics, give us that macro view a little bit. What was some of the motivation, I guess, for you and your colleagues to actually identify these specific areas and how you came to sort of apportion the importance that you did to them? I know that the view is maybe a little bit that there's some underappreciated areas here, but give us that headline first of all.
Thank you so much, Tom, and thank you for inviting me to come back to your podcast. So, the American computer scientist Alan Kay once said that perspective is worth more than 80 IQ points. And I think that nothing could be more pertinent to investing, especially equity investing. Clearly, I think it's highly appreciated that the macro matters. There is also increased appreciation that the bottom-up fundamentals matter. If you think about it, 1% of publicly traded companies drive 80% of the wealth creation in the equity markets. And certainly we have seen that in the US, that there is a decent amount of concentration in equity indices, with now in the US, the MAX 7 companies making up more than a third of the market cap. So macro matters, bottom-up fundamentals matter, but one perspective that we think is still underappreciated is, as you said, transformational innovation.
Well, yes, and I know you and your colleagues find that surprising. Can you tell us, why is that, Ulrike?
Here are some statistics to reflect on. US Steel was the first company that reached $1 billion of market cap. How? Because it transformed steel production using the recently invented Bessemer process. Then General Motors was the first company that reached $10 billion in market cap. How? Because it embraced automotive revolution. And then IBM was the first company that reached $100 billion in market cap. How? Because it became the global leader in computing. First having a mainframe monopoly, but then also had initially strong success with the PC. And then, of course, lastly, Apple was the first company that reached $1 trillion in market cap. How? Because, again, it was the leader in mobile computing. And I realize those are just 4 data points, but we think they carry a few insights, which is that all these companies were propelled to success by transformational innovation. And it was not just these companies in isolation. They formed whole new industries, from steel to technology hardware. And they formed completely new market segments that were not defined by the past. And then lastly, also that past success is not a guarantee for future success. We've actually not seen companies appearing on this list twice. Even IBM, that had a monopoly in computing with a mainframe, did not become a leader in PC, and it also missed out on cloud and mobile. So I think this shows us that it is key to understand the future and transformational innovation when we think about equity returns.
Yeah, that's fascinating. And it prompts me to ask you a follow-up question, Ulrike, which is that where you are dealing with innovation, change at such scale and often at such pace, and the fact that looking back isn't necessarily always as instructive to help you look forward. How do you agree on what definitions and metrics you're going to use? Because I guess when you're talking about innovation that is by its nature transformational, maybe we don't have those agreed definitions and terms. So tell me how you and your colleagues, what frames of reference were you using, as well as those data points you've already shared with us?
Yeah, we asked ourselves 3 questions to come up with transformational opportunities that we think are going to shape our future. One is, how large will the revenue opportunity be? We would like to see trillions of dollars of revenues for each of those opportunities over the next decade. And we want these opportunities to be persistent, not just a one-off trend. We want those transformational innovations to shape the economy structurally. And then lastly, we're not only looking for revenue opportunities, we want these opportunities to be profitable, because ultimately it's profits and cash flows that drive equity valuations. And that's when we came up with our 3, what I say, bold bets for the future that we predict are going to each generate trillions of revenues over the next decade. And that is artificial intelligence, power and resources, so electrification, and then lastly, longevity.
Well, you will talk about those in a second, but just a final thought on this, the nature of the structural opportunity here. And you've stressed it then. It's worth pointing out, I guess, maybe really underscoring the point that thematic investing's been around, right? We've talked about it before, but this is different. And it's a combination, of the structural nature of these opportunities and the scalability? Is that what makes this a compelling and different opportunity?
Yeah, I think it's 3 things. It's scale, persistence, and then profitability. Because ultimately, we need to be able to predict margins for these businesses. And oftentimes, we've had certain trends that maybe even large, but if we can't talk and ultimately derive profitability, then they're only going to be so large in terms of equity market appreciation. So for us, it really goes beyond the headline and trying to predict large profit pools over time. And it's not just a lip service. We also said, look, we're going to put our resources where our mouth is. So we created global teams that are now focused on these opportunities. The sector definition, we talked about it before, is really a segmentation of the past. It takes time for these sectors to be created after they've been around. I mean, the internet is a good example. It took time until this became its own industry. So again, we're saying we want to also structurally reflect where we see the future by creating teams that are focused on these opportunities. There's a lot of talk about certainly AI increasing the electrification, and that sector, or that new sector that we see, has obviously appreciated quite a bit this year. And then longevity. But institutionally, we haven't really seen this being reflected because teams are still organized in equities mainly by sectors. And we said to these teams that, focusing on these opportunities, writing white papers, updates that are focused on these opportunities, that will give us an edge in portfolio construction around these opportunities.
Well, look, you mentioned artificial intelligence, and I guess maybe there's the most kind of white noise around this, even if it's generated by the media. Let's start with AI, sizing and seizing the specifics of this opportunity. Look, we keep seeming to be at watershed moments, right, and inflection points, whether that's ChatGPT or whatever it is. Clearly, there's an investment boom, but it's interesting. We have to come back to the rigor of looking at this, looking for demonstrable use cases, right? Tell me a little bit about what we need to identify to best position to then exploit this transformational opportunity.
Yeah, we believe that AI is the most profound innovation in human history and also one of the largest investment opportunities. And the reason is that it's the first technology in human history that is self-improving. And that's why the rate of change is so much faster than anything we have seen. GPT 4.5 is now training GPT 5 and so forth. So that rate of change is accelerating because of the self-learning abilities of AI. And the reason why we are so optimistic on it is that we think it's going to trigger an unprecedented productivity boom, because this transformer model, which was the watershed moment for generative AI, now allows AI to produce high quality content and content that is extraordinarily diverse. Gen AI is really good at writing code, even code to improve itself. It's also great at producing movie clips, even with de-aged versions of the main characters. And it can predict the 3D structure of proteins. So it has all of these abilities. And it's only a matter of time, to your point, Tom, before we can translate this into tangible outcomes. We have certainly heard a lot of anecdotes in earnings calls from companies who've commented on just how much of an ROI the use of Gen AI has had, in particular on anything in the technology space. Andy Jassy commented on Gen AI saving $260 million when it was used to upgrade Java applications. Walmart has talked about updating its product catalog, having 100x ROI using Gen AI. So we've seen a lot of these data points. And one thing is clear, at least in our mind, is these data points are actually the worst that we'll ever see. So we're only going to gain by improved large language models in productivity and in outcomes. But you're right, it takes, of course, a while to implement AI institutionally. And therefore, in our work, for all of these opportunities, we have defined a value chain from the enabling layer all the way to the application layer. And we see that opportunity shifting over time. Right now, our investment focus is very much on the enabling layer. We've done work and also written a paper just on how much compute will be needed as we are moving from more Q&A based AI, so ChatGPT type models, to agentic AI, which is autonomous AI working in the enterprise, to ultimately physical AI with robotics. So you're absolutely right to point out that there will be different stages of AI implementation, and it will take some time, of course, to translate this into larger scale organizational outcomes. But I think we have sufficient data points in so many areas to say that this will be game changing across all industries.
Yeah, and that's so exciting, I guess. And if we look at kind of total market opportunity, let me ask you a sort of a corollary question about one of the other trios, longevity. Of course, it's based on this other big secular trend that we've talked about on this program often before, shifts in demography, of course, older societies. As with AI, there are some amazing numbers, aren't there, Ulrike? If we start to hang dollar estimates of what the market opportunity could look like in the longevity piece, we're talking about, many trillions of dollars by the end of this decade. I mean, they are extraordinary numbers which justify the transformational word. But tell me a little bit about longevity and why that one is also so compelling as an area.
Yeah, we think that is another very powerful structural trend. We think by 2034, there will be more people over 65 than under 18 in the US. And that will have consequences, on again, the broader industries from consumer to real estate to finance. We differentiate two opportunities or two segments of this opportunity set. One, the areas that are causal to longevity. So it's mainly pharma and the medtech industries, what helps us live longer and healthier. And then those that actually cater to the longevity of our older demographic. And that opportunity set is, as you said, also in the trillions of dollars over the next decade. We think right now the most compelling opportunity set is in the healthcare and pharma and medtech space, because especially when we talk about AI is such an accelerator to progress when it comes to drug discovery. So we think that there is a lot that will happen there over the next few years. And we see the most compelling opportunity set there. The consumer insurance and also real estate implication are a little bit more slowly moving, but also very, very compelling over time. If we think about pharma right now, over 30% of leading causes of death are still cardiovascular diseases, followed by cancer and then infectious and respiratory diseases. Research has shown that GLP-1 receptor antagonists reduce the risk of heart attacks quite significantly, and in some trials by over 25%. So there is a lot of progress being made on the pharma side to improve not just lifespan, but also health span. And we think the areas, again, of cardiovascular diseases, but also oncology are going to be very, very exciting over the next few years.
Yeah, and it's interesting, isn't it, that there are these interesting areas of overlay where these trios operate sort of across one another. You mentioned the context there of longevity and AI, drug discovery, diagnostics. And interestingly, if we bring in electrification, the third, if you like, of the third trio of the trio, also relevant. If we look at the development of AI at pace, the expansion of the necessary energy infrastructure to facilitate that, this is another area where there's overlay, but electrification kind of has its tentacles spread wider, don't they, Ulrike? So tell us a little bit about this one.
Yeah, it's a really great observation that all these three are very intertwined. And, for electrifications, AI obviously plays a role also. There, our thesis is that we need to upgrade our physical infrastructure. There is a need to accelerate the electrification of our economy. We believe that will require at least 3 trillion of annual investment spent by 2030. And that's driven, in our mind, by an acute imbalance in the demand and supply for electricity. On the demand side, we need to electrify our buildings, transportation, our industries, but also, as the icing on top, and you reference it again, AI. The electricity demand from AI has certainly been front and center in the news over the last few months and quarters. But again, we don't want to overstate that. In our estimates, that only makes up about 8% of the increase in demand until 2030. It is sort of the icing on the cake, but again, marginally, of course, not making that supply-demand imbalance better. So again, that's the demand side. And then on the supply side, we face an outdated electric grid in the US, but also in Europe. It's over 40 years old. Many components are beyond their lifespan. And there's some estimates that actually we lose about 5% of capacity each year through outages. So that opportunity is for us a significant one, both in terms of, again, if you think about the whole value chain, not just the energy transition, but also transmission and distribution. And especially because we think the energy mix is going to change over time with a larger fraction of renewables. And that also requires a different electric infrastructure that is more dynamic. There's more need for electric substations, transformers, and more electrical equipment overall, which again benefits a large part of the industrial complex. So maybe just to summarize it by what the outgoing CEO of Eaton, US Industrial in this space said, he said, this electrification he sees as a once in a lifetime super cycle. And we would agree with that statement. It's early days for a multi-year, multi-trillion-dollar opportunity.
Ulrike Hoffmann-Burchardi. And that brings us to the end of this edition of the show here on Monocle Radio. You can head to monocle.com for more or follow us wherever you get your audio. And as always, you can discover more, including about the trios, and you can find out how UBS can help you at ubs.com. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.